Hey everybody, how you doing? This is your buddy Uncle Bruce here. Welcome to my video today. I want to talk to you about SOFI for the week that we just finished. It's Friday, March the 8th, and I just want to kind of go over the week with you to let you know kind of where we're at, what's happened, and what to expect going forward. This is a follow-up video to the video I made earlier this week talking about this financing deal and the fallout from it, and the analytics of it, and you know how some people view it and how I view it. So thank you for joining me here. Let's talk about SOFI. We've got obviously a chart here for the week. Let me just pop it up right now, and I'll slip myself down here in the little corner so you can see what I'm doing. Anyway, the shares closed here Friday night at $7.72 a share. All right. If you notice at the beginning of the chart on the left side, that's over here. You know, Monday they were just under $9, and they dipped into that 8.50 level on Tuesday. We found out what was going on regarding this proposed financing, and the shares took their drop. 724, if I recall, 727 is a magic number. It's 727 Tuesday night, and that is the number that this entire financing deal is hinged on. And here's the headline that came out: SOFI Technologies announces proposed convertible senior notes offering due 2029. And we now know what this notes offering actually is. We now are aware that it is a $750 million deal with an option of about another 30 million on top of that for the broker to take on. This is typical. It's quite normal. It nets out SOFI about $845 million. That's how much they end up walking away with. And use of proceeds. They're going to knock off a debt that they've been carrying on their books, and I've shown this before. There are $320 million of preferred stock on the books. If you take a look at this chart all the way to the end over there, 320.37 million. All right. Now that note is costing them, that preferred share is costing them, far right again, $40,430,000 a year in interest. This is a 12.5% preferred share that they have outstanding, and they have been carrying it for years, a couple of years now, ever since they went public. This is not a secret to the auditors or anybody else. It's just been on the books. The interest rate on this preferred share, the way it was structured, is that the rates were supposed to go up to 17.5% in, I believe, June of this year. So today's March the 8th. So, April, May, June, boom, July, right? So in 3 months, they were going to have to pay over $60 million a year in interest on this $320 million preferred share. That's being paid off immediately. So this deal closes tonight, I suppose. By Monday morning, Tuesday morning, it's gone. All right, so they don't have to pay this interest anymore. This is $40 million real dollars for this year. Going forward, they're not going to pay anymore. In other words, $10 million a quarter. This flows right to the bottom line of the corporation. So SOFI just made $40 million a year more in money by paying off those preferred shares, and it was going to be $60 million. So really, for 2025 and 2026, and so it was going to be $60 million a year, $5 million a month, gone. Okay, that means the company has to revise their financials. They're going to have to come out into to the market and say, based on the fact that we've closed this financing and we've paid off these preferreds, we have some changes in our corporate structure to announce. One, we have to up our guidance for profits by $40 million going forward per year. So they'll do that. The second thing that's happened here, and will also affect the company's value, is they've part of this deal. I'll come back to this deal in a second. This is a $750 million deal. What else is going on is they are retiring $600 million of preferred shares that have been on the books for years with zero interest. And they're knocking those off, and they're just doing a stock swap. They're basically taking common shares from their treasury, handing it over to these preferreds, taking the preferreds back and canceling them out. And it's a one-for-one swap. It's been calculated in the dilution of the company the entire time. The bottom line, though, is this is $600 million of paper that is being swapped into common at $9.72 a share. This is important. $9.72. Okay, we just closed the market tonight here at $7.72. Here's today's actual chart at the bell, $7.72. So $9.72, $2 higher is what the preferred shareholders are getting the stock at. That is not serious dilution. And on this $750 million plus option deal, this 845 net deal, the company, SOFI, has the option at their leisure to knock off the investors by giving them stock instead of carrying this $845 million debt deal. And the price for that swap is $9.45. And this deal is I think is a sweetheart deal. Everyone is coming out of this deal winning. The institutional investors who put up this money, there are a ton of them, I believe, that have been contacted for this. I don't think the company went to any one group. The folks over at, I think it might be Goldman Sachs that's leading this deal, which is also important. Goldman Sachs probably went to 100 of their favorite institutional clients, hedge funds, pension funds, mutual funds, ETFs, those who are eligible to be able to buy this kind of a deal. And they offered them 1.25% interest on their money, which is jack squat, and a conversion into SOFI stock at $9.45. But they can't get the stock at $9.45 unless it trades in the open market over $12.29. That's the deal. So 30% higher than $7.27 is $9.45. 30% higher than that is $12.29. At the same time, the company took a call option from the broker. They bought a call option. This is a derivative that's off market, where the corporation paid $78.8 million to get this cap call transaction deal. And this allows the company, SOFI, to call stock from the broker equal to enough money, enough value to swap the $845 million net deal, at the total, whatever that total is, for stock at $9.45. Now, the company will only do that if the stock goes higher in price. And the broker, in the meantime, the last 2 days of trading that we've been going through here, 2-3 days, the broker has been buying up gobs of paper between 7.05, which is the low trade on Wednesday, all the way to today's close, 7.72. They have now pretty well got enough stock that they've bought off the street to deliver to SOFI anytime SOFI wants it. Now, the broker knows, SOFI knows, the institutional investors know, and I know, and now you know. There's no way, there ain't no way that SOFI can just magically cut a check for $850 million and buy stock from this broker and then just hand the shares over to the institutions. I mean, they just got $845 million, but they put $320 into that bond, and they got $500 million on left, less the cost of the option. No, the way it works is the option will be worth money the higher the stock goes. Everybody knows, and now you know. If the shares go up in price to $12.29, I have to look at my notes, $12.29, that's the trigger price that the company could choose to use to convert the 800 plus million in debt into paper. The paper, of course, which is free trading paper that has been bought this week by the broker. This is not new issued paper. But the shares are going to have to go higher. They're going to have to go up to $14.54. That's the top end of this option deal that the company has made with the broker. It can't go beyond that. Doesn't mean the stock can't go beyond that, but the profit to the corporation is topped out at $14.54. And in effect, the difference in price from $7.27 to $14.54 will be a profit for the corporation to be able to turn around and swap the call option for stock and pay off the investors. Lovely little deal. Okay, so let's go back a little bit. You are, and you're one of the institutional investors. You get a phone call from Goldman Sachs. They tell you that Anthony Noto, this guy right here, is thinking of raising some cash for the company by doing a capped call transaction deal. You're going, no, isn't that the guy that owns the stadium is named after SoFi Stadium in LA? Yeah, that's the company, SoFi in Los Angeles, this place right here. So beautiful. Okay, you say how much? What are the terms and conditions? And the broker says to you, Goldman Sachs says to you, we'll let you give us $10 million. We're calling a whole bunch of these guys, a whole bunch of you guys, and give us $10 million and you'll get stock for $9.45 if the shares trade at $12.29 and higher up to the $14.54 cap call transaction price. You as an institution go, done deal. We'll take 1.25% interest. That's not a problem. We'll take menial interest, but we want the paper. Yeah, we're interested because we know that you're going to pay off that preferred share, 12.5% interest. That's right there, 40 million profit to the company. We also know you're doing this other swap. We also know Noto knows what he's doing. He's a Wall Street insider. We're definitely interested in this deal because, yeah, this stock is going to $15 and $20 and $30 a share down the road. No question about it. The broker says to you, great, you're in for 10 million. Send us a check. You're done. We'll set up the paperwork, get you looked after, but you can't buy any stock on the market right now until this deal closes, because we have to register the deal with the SEC, and then we're good to go. We should be able to register this deal in a couple of days. I think it's happening as I'm speaking to you, but give or take an hour or a day or two, it doesn't matter. These institutions, there could be 100 of them, could well be waiting to buy the stock, waiting to buy the stock. Why would they do that? Why would an institution buy more stock? They just got this deal for $10 million at $9.45. They see what you see and what I see. The stock's at $7.70 something a share right now. These guys can do math. They're hedge funds. They have calculators. They got college kids with graduations in math. They figured out the stock is trading for $1.80 less than what we're going to get it for. Why don't we buy some in the meantime? And so get ready, kids, for a whole bunch of institutional investors to start loading up on this stuff. It's going to happen. I'm not telling you in 5 minutes it's going to take off, but you're going to start to notice, and I'll let you know, that institutions are buying up the stock, and they're going to buy it through 7 and 8 and into 9, and they're going to pay more than 9. They're going to pay more than 10. They're going to pay more than 11. Now you're saying to me, why, Bruce? Why would they pay more now than what they can get the stock for at $9.45? Why are they doing that? Because they know they're not getting the stock unless it hits $12.20 a share anyway. So they're motivated. The stock breaks through 12, so they get their stock at $9.45. They also know that the entire deal goes down when it hits $14.54 because of the capped call transaction that's built in, this call option that's built in for SoFi. Everyone is in on this. They all know the upside of this deal, that from $15 and beyond, SoFi is able to swap out $850 million in paper for paper. That's existing common shares that are trading right now, that are not trading anymore, that have now been taken off the street and are going to these institutions. I wouldn't be surprised if these institutions buy a couple of $1 billion worth of stock. They'll buy 100 million, 150 million of the rest of the stock. And that means a total of 250 million shares disappear from trading, of which there are now 900 million less 250 million leaves us 650 million shares. And oh, did I tell you? The short positions are being adjusted. They are now short 170 million shares. The shorters out there have got a problem. A great big fat problem they didn't have a week ago. A week ago, they were sitting there going, this is great. The stock's at $9 a share. We're shorting it. We're short 170 million shares now. We hardly have to report this to the world because the SEC rules are so loosey-goosey. We can hide this stuff and we can report it a week or two, a month later, no problem. And, the stock's topping out at 9. It'll back off and we'll buy it back for cheap. This week, they find out, oh my God, 900 million shares used to be floating around out there. Now we know it's going to be down to 800 million, and it could be down to 650 million, and we're short 170 million shares. Holy crap, we're at a 25% short position. We were sitting pretty last week at 17% short position. All of a sudden, oops, we did it again. We're in big trouble here, and this is what's coming. My brokerage experience is just screaming at me, this thing is going to go. There's going to be a squeeze on this, and most of the market is not quite aware of all these little nuances and these details, but it's coming. A couple of things. Mitsu Securities. Dan Dolev, the analyst, has put a $12 target price on this stock. They've had a $12 price. He's still telling us it's $12. My target price is at least $12. This deal that they have done this week is really positive. It's accretive for the company. He figured $60 million in savings and interest rates because he's looking at that 17.5% number coming up. And he's talking about a 2% increase in capital ratios. Now, in the banking world, capital ratio is a big deal, and a 2% swing towards the corporate side, humongous. It allows the bank to lend out a lot more money. That's really what this means, which means Dan knows that the company has to restate their financials. They're going to have to come clean to the market, probably next week, and they'll be happy to do it. Don't worry. Mr. Noto is not afraid to let the world know what I'm about to tell you. He can't wait to tell you this news. Oh, we have to restate our financials. Our net profits are going to be higher than we've previously estimated. That's what's coming up. So get ready for a bunch of positive news, not only from Mr. Noto, not only from the analysts that cover the stock now, especially if they're on the ball like the guys at Mitsu are, but there's one more thing. There's always one more thing. And the one more thing you have to understand, just one more thing. You're now going to find there could be as many as 100 institutional investors who are likely going to be promoting the heck out of this stock because they're in it. They're in it now, and they are motivated for this to break $15 a share, like you're motivated, like I'm motivated. And so we have a whole bunch of Wall Street people who joined the party this week, and they're all here at the Nakatomi Tower. Welcome to the party, pal, we like to say. We're all here. If I could only get my thing to work. Anyway, fun times coming up. There he is. Welcome to the party, pal. Here we go. This is going to be really something. Any event, that is the latest. A couple little things about Noto before I go. Anthony Noto was a graduate of West Point. Anthony Noto was the #1 internet analyst from 2003 to 2007, ranked #1 for 4 years in a row, went at Goldman Sachs, became a managing partner, was earning as much as $72 million a year at the height of his career at Goldman, left the firm twice. The second time he left the firm, took over Twitter, CFO, and now he's over here at SOFI, and he has stock options that kick in for him if the shares trade at $25 a share, $35 a share, and $40 to $45 a share. Massive, massive stock rewards are coming his way. He's motivated much higher than $15 a share. We've only just started this whole dealio. It's going to be a ton of fun. That is the story in a nutshell. I've made this video as short as I can. Have a great weekend, everybody. We'll be back here Monday. Join me Monday morning live, 8 o'clock in the morning if you're a Gold Bagel member of this channel. If you're not a Gold Bagel member, join me at 8:30 until 10:30, Monday to Friday when the markets are open. Don't forget, we're turning the clocks back Sunday night. It's going to be an early morning Monday as we get going for another week of fun. And we'll talk about writing options, cash secured puts on SoFi, making all kinds of ways to make money here off of this thing. It's going to be one hell of a ride. I'll see you soon. Thanks for joining me today. Take care, everybody. Bye for now.